Welcome to The Explainer. I am so thrilled to have you joining us today. We're diving right into the Q1FY27 investor presentation from a company that is quite literally the hidden engine powering some of the most foundational businesses on the planet. I'm talking about ServiceTitan. We're going to break down their financial momentum, their highly unique market position, and exactly how they calculate their future growth. Let's get right into it.
Now, before we get swept up in the high-margin software metrics and billions in transactions, we really need to ground ourselves in the physical reality of the trades. I mean, think about the folks out there in the field, on rooftops, loading docks, deep inside homes. That is where the actual magic happens. This is the ultimate blue-collar sector, but it's undergoing this profound digital transformation. These workers doing the heavy lifting, they're the actual end users of the software we're about to analyze.
To make sense of all this data, we are going to tackle this in 4 parts. First, the trade's operating system. Second, the massive durable market. Third, we'll hit the Q1FY27 financial highlights. And finally, capturing future growth.
All right, starting off with part 1, the trade's operating system. You'll hear this phrase a lot with them. Born in the trades, built for the trades. And it's not just some flashy marketing slogan. It literally defines their entire approach. They have this absolute maniacal focus on the success of specialty subcontractors. By zeroing in on this specific type of user, ServiceTitan completely avoids the trap that catches a lot of generic CRMs. You know, those systems that just completely fall apart when you try to use them for complex, real-world dispatching or keeping the field synced with the back office. They're building the definitive operating system to drive profitable growth for this exact sector. And what's super interesting is how this focus actually splits into 2 really robust pillars. On the residential side, you've got single-family home services. We're talking plumbing, electrical, pest control, HVAC, roofing. It's a hugely fragmented market. But then they're playing just as hard on the commercial side. This is the heavy infrastructure world. Elevators, loading docks, fire and life safety, commercial groundskeeping. By dominating both sides of the coin, they're basically embedding themselves into the fundamental maintenance of our entire built environment.
Which brings us right to part 2, their massive durable market.
Let's look at how they progressively scale this opportunity, because the numbers get huge fast. They start with the gross transaction value, or GTV, that their current customers generated just over the last 12 months. That baseline alone is $86 billion. But step up to the middle bucket, the specific trades and markets they currently serve, and that jumps to about $650 billion. And when you zoom all the way out to the completely addressable market, including down-market businesses and heavy commercial construction, you are looking at a staggering $1.5 trillion. That is an absolute runway for expansion.
So, moving into part 3, let's look at the Q1FY27 financial highlights to see how they're executing.
Okay, check this out. We're looking at $269 million in total revenue for just this one single quarter. This is a clear signal that ServiceTitan isn't some scrappy startup anymore. They are operating at a highly mature enterprise scale, pulling in well over $1 billion on an annualized basis.
But what makes that $269 million figure so wild is the growth engine behind it. That's a 25% year-over-year revenue growth. Maintaining a 25% growth clip when you're already at $1 billion run rate, that is an incredible show of sustained momentum in a really durable market. Now here is the real underlying engine. $22 billion in gross transaction value, or GTV, for the quarter. It's super important we get this metric right. This isn't ServiceTitan's own revenue. This is the total economic value of the services their customers are booking and paying for through the platform. Because ServiceTitan is acting as your CRM, your operational hub, and your payments gateway all rolled into one, they capture this entire flow of funds. It makes the platform incredibly sticky and proves it's literally mission-critical for their customers.
And that $22 billion in GTV, it's growing at a really rapid 23% year-over-year, which is awesome because it beautifully tracks with their 25% revenue growth. It basically tells us their customers are either growing their own underlying businesses at a crazy pace, or ServiceTitan is just successfully capturing more and more of the market volume.
All right, let's catch our breath from the growth numbers for a second and look at how efficient this machine actually is. These profitability and retention metrics prove the model truly works. They've got an 81.3% non-GAAP platform gross margin. I mean, that is elite, best-in-class software territory right there. Plus a 15.2% non-GAAP operating margin. So they're achieving that high growth profitably. And honestly, my favorite part, a net dollar retention rate of over 110%. That tells us that once a contractor gets onto ServiceTitan, they don't just stay, they actually buy more modules and spend more money year after year.
Which leads us perfectly into part 4, capturing future growth.
So how do they keep this going? They use a surprisingly simple, almost mathematical formula to project their future revenue. They take that massive total GTV we just talked about, the approximate money generated by the trades businesses themselves, and they multiply it by what they call their effective earn rate. That earn rate is just a percentage of the GTV that gets spent on ServiceTitan's tools. It's simple math. Either you increase the total GTV flowing through the system, or you increase your earn rate, and boom, revenue goes up.
And that's exactly what their strategic roadmap looks like. Today, that average effective earn rate is just over 1%. But as they get existing customers to adopt the full platform, cross-selling things, deeply integrated tools like embedded payments, payroll processing, and marketing automation, they project stepping that earn rate up to around 2%. And looking even further down the road, as they launch brand new product features and widen their moat, they expect to push that earn rate to 2% and beyond. It is a very clear, highly actionable lever for compounding their growth.
So let's leave you with a provocative thought to chew on. We've seen the 25% revenue growth. We've seen the 81% gross margins. But when you look at that massive $1.5 trillion addressable market, and you realize they're currently only capturing about a 1% earn rate on the GTV they actually touch, you really have to ask yourself, as ServiceTitan continues to expand its moat and roll out new features, just how much of this entire, durable, blue-collar industry will this operating system ultimately power? It's a fascinating question for the future of the trades. Thanks so much for joining me for this explainer. I really hope this helps bring these metrics to life for you, and as always, keep learning.